I'm Anthony Vlahovic. I'm a licensed real estate agent, and in today's video, I want to talk about the projections for 2025 and the housing market. Today, I'm going to cover three topics, which are mortgage rates, prices, and inventory, which are three of the main key indicators and drivers of the market. First, we'll talk about the mortgage rates projections, which are as high as 6.8% from Redfin and go down to as low as 6.12% from the National Association of Home Builders. From all the data that was gathered, the average is at 6.36%. This has been a bit misleading for buyers because obviously since the Fed has started cutting rates, mortgage rates have actually crept up a bit since they are following the 10-year Treasury bond yield, and as those have gone up, so have mortgage rates. But it does seem the consensus is that we will see them dip further in 2025, as currently they're sitting right around 7%, give or take a bit there, depending on your qualifications, how much you're putting down, the terms of the loan, all of that good stuff. But the good news here is that most experts do believe rates will continue down in 2025, which ultimately is a good thing for consumers and the market as a whole. Next topic that we'll talk about are home prices, and on average of the 22 analysts that were gathered for this data, they are expecting a 3% increase in home prices in the year of 2025. The high is at 5.5%, and there's actually two analysts that came back at negative, with the lowest being negative 2%. So home prices going down 2% in 2025. And of course, their metrics for determining this can be different, but I think ultimately it comes down to the simple supply and demand. And as we'll see next, supply is expected to go up. So this could certainly be the driving indicator that the two analysts in the negative category are referring to. From my perspective as an actual agent and just seeing what's going on, I kind of had mixed emotions about this because 2024 definitely saw a huge increase in supply, which is good for buyers because you have more to choose from. But obviously as a seller, it provides a lot more competition, which in most cases and in basic economics, that would drive pricing down. Demand in 2024 was steady, but it was certainly lower than previous years. So kind of again, using that basic calculation, if demand is not as high, supply is up, you would expect prices to decrease. Of course, all of this is going to be very location specific, as real estate always is, but ultimately, I do think that prices could stay flat to maybe up a little bit, but using this average of 3%, that would essentially put us in line with a normal real estate year. It's definitely not the COVID years where home prices are going up 10 to 20% year over year. So that's definitely behind us. I think as this data indicates, we certainly could see a normal increase. But, just generally speaking, I also wouldn't be surprised to see a bit of a dip or basically a flat year if inventory does go up, as I do suspect as well that it will. The last piece of data that we're going to look at here is inventory, which as you can see is projected to increase by 15% from where we currently stand. And I will say that's a pretty significant increase. 15% definitely is good news for buyers and not so great news for people trying to sell. Definitely means you're going to have more competition, but on the flip side, buyers have more to choose from, which is good for them. There's definitely a lot of factors contributing to this. I think you look at some of the things going across the country right now, like what's happening in California, tragic event with the wildfires. That is certainly going to cause interest rates to go up, and they are expecting that everybody in the country is going to feel that because insurers there also insure every other part of the country, and they're going to have to make up for those losses through all of their other policyholders, unfortunately. You also have the hurricanes here in Florida that have happened over the last few years. Those have caused insurance rates to go up. Obviously, property taxes have gone up as prices have increased throughout the country. That's a factor. And then lastly, I mean, you just have a lot of COVID implants, if you will, that have been moving back to the states that they may have moved from during COVID. So that has certainly caused inventory up. Maybe they thought that their family was going to follow them. They didn't end up doing so, and now they feel like they want to be back closer to their family. But obviously, there's a whole host of reasons that can contribute to inventory going up. Could be as simple as people just needing cash and wanting to cash in on their equity. Obviously, with the rule, if you will, of being in your primary property for 2 years and then not having to pay a capital gains tax has been something that has kept people kind of locked into their home for the past 2 years because they're waiting to hit that period and it may be coming up for them. So yeah, there's really a whole host of reasons that inventory could be projected to go up this 15%. But overall, I do agree with that consensus. I see it happening in my market where I'm at here in Vero Beach and simply in Florida. A lot of that is due to the insurance rates having gone up so much over the last few years from the hurricanes. And I suspect that California is definitely going to see kind of an exodus from all of these people that are going to have to rebuild their homes, and it's going to take years and years to be able to get that done. They're obviously going to need some place to live and a place to work. So, yeah, this isn't necessarily, it's good news and it's bad news, depending what side you're on, right? So, I think for consumers, it's great news. They're going to have more choices. But for people that are selling, you may want to get ahead of that. If you live in a neighborhood now where maybe there's only 1 or 2 homes for sale, that's something to take advantage of, because obviously when there's 7, 8, 10 plus homes for sale in your community, the competition is way higher. You're going to be jumping on every little other price reduction somebody else does, trying to keep up with them, and that's not a great situation to be in as a seller. So overall, we are expecting to see mortgage rates decline, which is good. We are expecting, according to these analysts, to see home prices increase at a very normal pace with the average of 3%. And we are expecting to see inventory increase by 15%. I think if you look at it strictly from an economic standpoint and you look at supply and demand, demand will be driven up by mortgage rates decreasing, but obviously supply is increasing at a greater rate. So if I'm just making a projection based on that, I would fall more into the category of home prices going down slightly, because simply demand may not keep up with supply, and the more supply there is, the more price reductions you're going to see, and you're going to see sellers competing with one another to make their listing more attractive. So that kind of wraps up what the analysts are seeing for the 2025 projections, and also a little bit of what I'm seeing from my end as an active real estate agent in the market. I hope you found some value in this, and there's maybe a few things you can take away from it. Of course, if you have any questions or any comments, feel free to leave a comment below, and I will certainly get back to you, as I'm sure other people will. Thank you and have a great day.